Welcome back, insiders. Now, you probably already know that Charles Schwab, the San Francisco-based bank and broker, bought TD Ameritrade back in 2019. TD was one of the leading discount broker providers, most notoriously known for its ThinkOrSwim platform, aka TOS. Now, there's a lot of rumors spreading regarding retail's ability to keep trading on TOS. So if you're an active trader or investor looking for the truth, this video is for you. Here's what we're going to be discussing today. This all started back in 2019, so we're going to catch up on the whole entire timeline. And once we get caught up, we're also going to discuss the roadmap ahead for TD Ameritrade users. We'll talk about some risk and rewards for the users, including changes to your TOS or TD Ameritrade account, which is now a Charles Schwab account. We're going to talk about changes in perks like interest rates and idle cash, effects on TOS. We're going to clear up the margin and settlement rumors, and then we're going to look at SCHW, Charles Schwab stock, and we're going to look at some comps as well. Also, change of background, we are in Austria today. So let's get it going and talk about the original press release that came out, and this happened in November 25th, 2019. You'll see that they said all stock transaction valued at approximately $26 billion. That's how much Charles Schwab acquired TD Ameritrade for. Under the agreement, TD Ameritrade shareholders will receive 1.0837 Schwab shares for each TD Ameritrade share, which represents a 17% right here premium over the 30-day volume weighted average price for this specific day. Now, this is pretty common. You'll see this actually happen quite a lot. It's typical for acquisitions to have a premium. Right now, the big story is obviously Alphabet looking to acquire HubSpot. And if we scroll down, we have 30% premium, right? So this is nothing new. And I think 17% premium is actually quite okay. Anyway, let's go ahead and see some FAQs on this. They're going to be adding an additional 12 million client accounts at 1.3 trillion in client assets. That's a lot in client assets, and 5 billion in annual revenue. So really, really big numbers there. I guess good to see for Charles Schwab, especially if you're a Schwab shareholder at the time. Later on, you're going to see exactly what happened to the Schwab stock price after they announced the acquisition. The CEO and Schwab president here said, "We have long respected TD Ameritrade since our early days pioneering the discount brokerage industry and a fellow advocate for investors and independent investment advisors. Together, we share a passion for breaking down barriers for investors and advisors throughout the combination of low cost, great service, and tech." So they do really emphasize the fact that they like what TD Ameritrade is doing, and they've been alongside TD Ameritrade since the beginning. The combining brings together two leading firms with proud and similar histories of making investing more accessible to all, right? That's the discount brokerage. More than 40 years ago, Schwab and TD started out as alternatives to traditional Wall Street brokerage. So that's a big theme here in this whole entire thing. So I just want to keep that in mind as we continue talking about the pros and cons for retail. So they started combining the firms back in 2020, and they said here that it will take approximately 18 to 36 months for this to be completed. Last year, they had about 4 phases of accounts being moved over, and they want to finish up with a small phase now in 2024, which you might be part of. I know I am part of that. So that's the last phase they're on now. I have yet to be fully transitioned over. They're doing smaller groups we will start with a smaller group to ensure best client experience. So that's why they're moving it over in batches. Totally makes sense coming from a SaaS background myself. That's typically what you would be doing. And it is really, really simple. All I had to do was basically create a new login account. Your Schwab login info is all set. And then they give you kind of some expectations. I have a little bit more time. Now, I did want to mention here that I have only one account being moved over. I had one inactive account. Well, let me scroll down a little bit more. One inactive account that it seems like it's not being transferred over. My Roth is my primary trading account and investing account. So that one is being moved over. But I guess if you have an inactive account at TD Ameritrade, it's not. That seems to be the consensus so far. Looking ahead though, they've converted nearly 90% of all accounts and 100% of RIA accounts. RIA is Registered Investment Advisor accounts, so somebody that manages somebody else's accounts. So what does this all mean? What are the risks and rewards for the users, and what happens to the trading platforms? Now, they do mention the biggest integration in history. They don't clarify specifically what that means, but I guess, moving over from one ecosystem into the next ecosystem is a pretty safe bet. And What I'm a little bit nervous about here, and this is what a lot of people are complaining about as a trader, I see this quite a lot, is TOS, ThinkorSwim platform, this one right here, is seeing a lot of delays and freezes, lots of traders complaining about that. I don't have any hard evidence, but that's one of the actual things that we've been experiencing. Now, this happens a lot during times of a lot of volatility. Like in 2020, you saw TOS freeze up, but right now there's not a lot of volatility, there's not a lot of volume, so I'm kind of surprised why TOS is freezing up so much, and this is something in the chat rooms you see people complain about a lot. So I would say integration challenges might be one, but I'm not really sure what's happening in the background. That's pure speculation at this point. They also talk about, let's go back here, they talk about, will jobs be eliminated as part of the integration? Yes, reductions in staff are necessary, part of achieving overall expense synergies. Now, this kind of makes sense. I mean, obviously, you're going to have a lot of duplicate roles that you don't need anymore as you consolidate the two businesses into one. So the majority of positions that will be eliminated will be determined based on overlapping and duplicate roles. Details on how these decisions will be reached will be shared at a later date once the integration process has begun, which is basically ongoing right now. So I guess one of the things would be risks that I would value is TD Ameritrade always had really good support. I would give it like an 8 out of 10, right? Schwab discusses a lot. Now, Schwab is discussing a lot about reducing these redundancies like duplicate staff. So I'm thinking maybe there could be some issues if they cut too much staff going forward. I don't know. That, again, is subjective. But I do know that TD Ameritrade has always been really good. So if I've ever had an issue, I'd call them right up, be on a call pretty quick with a real person, usually based in America, and it'd be like a pretty nice chat. So we'll see what happens going forward. I would say those are probably the two biggest risks that I've noticed right now, the integration of TOS, and then maybe support's going to get a lot potentially worse. I don't really see it, but that is one risk factor I think worth mentioning. Now let's talk about some benefits, right? The trading platform benefits. I think this is actually a bigger benefit to people at Charles Schwab because they didn't have access to TOS. And I've never heard anyone talking about Schwab trading platforms. No one was ever like, oh man, I'm using Schwab app or Schwab.com, and I'm a great day trader on that. So I think really the advantage is for Schwab users to get ThinkorSwim, and I think that's a big catalyst for this whole entire thing. So besides getting ThinkorSwim for Schwab users, I think there might be another catalyst here of why Charles Schwab bought TD Ameritrade, TD Ameritrade, and I think that was probably for order of payment flow that was popularized by Robinhood. So zero commission, but now they make money by selling your orders to a clearinghouse like Citadel that pays for your orders, so they can basically front run you a very small amount, like those few extra basis points. So I think that's really what's going in here. And they do move over all the platforms from TD Ameritrade, like ThinkPipes, which was used by investment advisors as well. So if you're coming from TD Ameritrade, it doesn't seem like you're losing that much or really anything in that regard. So I think that's pretty powerful. Let's talk about some commissions here. You'll see things like even wire fees going down. A lot of this stuff is stuff you don't really need. I mean, physical stock certificate goes down from $500 to $100. I mean, that all sounds good and dandy, but how many people are doing that? What I was more interested is the actual trading fees. A lot of these things are pretty similar, let's just say. I mean, we got options here, $0 base commission, so you don't get paid, $5 to open the trade, $5 to close it, but you have the contract fee as well. I would highly recommend to call Charles Schwab and ask if you can get this lowered, especially if you have some volume. They probably will lower it. This is actually the same for me right now on TD Ameritrade. I pay 0.65 cents, but it used to be higher. I called TD Ameritrade and they lowered it, so I'm sure the same thing would happen if you do it on Schwab. OTCs right now are also $6.95 on TD Ameritrade. Here's actually a picture of an OTC example. So if I wanted to buy 500 shares of this OTC stock, it would cost me, this is actually the cost of the trade. I should have just done more shares to make it more clear. But yeah, the actual cost would be $9.85 of how much I would be quote unquote investing. But the commission right here is $6.95, right? So cost of trade including commissions, and the total cost would be $16.80. So yeah, $6.95, same there. I actually don't trade futures or forex, so I can't really comment on that for TD Ameritrade, but I would probably assume it's pretty similar. It doesn't seem like anything actually is increasing in price in that regard that I've come across. There is margin, which a lot of people are discussing, And margin has also come down. Schwab's current base rate is 11.75, and these are the effective rates, so whatever category you're in, somewhere between 11.825 and 13.575. This is basically if you are owning more shares than you actually have money in your account, you can do that. So your margin rate, but how much are you paying for that additional assets you're owning based on actually how much money you have? So TD Ameritrade is at between 12.75 and 14.75. So you're kind of winning like 1% across the board. Nothing really life-changing, but again, that's getting improved as well. You're also getting an improvement here, earn up to 0.5% on USD in Charles Schwab. This is coming from a secondary source, and that's actually pretty good because that's 20% more than on TD Ameritrade. So can't complain there. Now that you'll never get rich from these tiny amounts and it won't even keep up with inflation. But again, another small improvement across the board. So that's really nice. Now, Robinhood says they pay up to 5% on USD that's uninvested. So maybe Robinhood would actually be the best if you have a large sum of cash just sitting around, because that would beat inflation. Hey guys, did you know you can get this content early in text form on tradejournal.co? For more content like this, be sure to follow my portfolio, my profile at tradejournal.co/Winkler. Once you follow me, you'll be notified of new trades or posts that I come out with. You can also fine-tune your interests. For example, if you're only interested in my stock investments, but not my day trades or my NFTs, just mute those portfolios. You can also get your own trading and investing analytics compiled for you. All you need to do is create an account and then follow the new onboarding guide to get set up. Now with 25 brokers with API sync, it's easier than ever. Your trades will automatically be imported for you, saving you time and any human errors. Know the why behind your P&L curve and how to fix it. It's time to start maximizing your trading and investing alpha. Create your account on tradejournal.co today. Now here's a hot topic, margin requirements on certain securities. They only say there's certain margin requirements for certain stocks, right? The following requirements are in place for affected securities, and it's basically all the hype stocks, all the meme stocks, AMC, BBBY, CAR, DWAC, GME. Now, these will basically require that you have 100% margin requirement. So you need to have, if you want to invest $1,000, you need to have those $1,000, as opposed to only having, let's say, 30% or $300 if you want to invest $1,000. This is the only thing I've been able to find regarding margin requirements. The big fear and the big rumors that were going on is basically any stock below $2, you would have to front the whole entire thing, fund the whole amount, and you don't get the money back. There's no margin on settlement period. So if I invest $1,000 or trade $1,000 on, let's just say AMC, I will not see that money back until Wednesday after the 2-day settlement period. So that was the big fear. I have yet to see any hard proof regarding that on stocks below $2 or $3 or any stocks in general. So I think that is a total rumor at the moment. And there's no facts regarding that. And if there was anything, then Charles Schwab have retracted that, probably because of popular demand. So maybe there's that. Now, the other thing is 7 things to know about the T+1 settlement. This is actually not a rumor. This is a fact. Pretty soon, let's just scroll down here a little bit. Bottom line, on May 28th, T+1 arrives for U.S. investors, and this is really huge. This could fuel a whole entire momentum wave in the trading space. When I did the 25K challenge, small account challenge, I started with a 6K account, and this was a cash account, right? So I couldn't just trade unlimited. And what I did was I did 3 1K trades on Monday, and then again on Tuesday I would do 3 1K trades, and then on Wednesday my cash was finally settled from Monday, and I could do 3K trades again, 3 1K trades. So that's what I was doing every single time in my 25 count challenge. Now what's happening is I could do 6 1K trades and on Monday, and then again on Tuesday, all my cash is free again. So on Tuesday, I can do that. I mean, just think about that. From 3K, now I can do 6K every single day. And I mean, we're talking about doubling the amount of volume on cash accounts that can go into the market. So that could be a huge fuel for momentum. But this is not something coming from Charles Schwab. This is coming from the regulators. So I wouldn't say it was a benefit from this acquisition. What's driving the shorter settlement cycles? They say faster technology and investor preferences mainly. I feel like that's a very big mainly. I think there's a lot more going on behind that. I don't think they would just change it out of purely goodwill. So I think there's probably some lobbyists. Maybe they want more order for cash flow, and it's going to help their revenue, right? I think that's really what's going on here. So that is really good news. So mark it in your calendars, May 28th, which is roughly 6 weeks away. I think we could see a nice wave of new Momo there. Now let's talk about Charles Schwab, the actual stock itself. So what I want to look at, let me go over to my TOS. Here is the stock. We're actually on a monthly chart, which I'll pull up is a weekly chart. I think that would be a little bit better. And here you can see the chart of Charles Schwab. And this is when the actual acquisition went through. We had a nice gap day actually. And ever since we sold off for a little bit, but this is because 2020 happened. So let me zoom into a daily chart. Boom, scroll back. And here you'll see that nice rally in anticipation, maybe buy the rumor, sell the news. There was some news coming out that there might be an acquisition. Then the actual news came out in the afternoon, extended hours, and there was a huge gap day. So here we saw a 13.52% on this day after the gap. So the news came out in the afternoon. That's why it doesn't show here, and it gapped up. And then this was a roughly 7% green day, even though it pulled off and ended on a red candle. It still was a big gap day. And then COVID happened. Everything sold off in March, but actually didn't, Charles Schwab only sold off about 45%, which really, sounds pretty bad, but think about tech. That was a real disaster. Let's go back to a weekly chart. So ever since then, we've had, after COVID, we had a really good push up, which is no surprise there. And roughly from this area here to where we are now, it was about like 45% increase after a little bit of a sell-off, which is not really too bad. Is there a play here buying Schwab? Maybe, but let's see here. The market cap is about 130 billion. It's not nothing. And it does feel like a lot of these companies are a little bit range bound. I mean, there is definitely upward trend here without a question, but it does pull back quite a lot and quite aggressively, right? We're a little bit in this ascending wedge, and right now we're a little bit near the middle of that, maybe as close where we approach to 80. I just don't know how confident I feel about buying this, because I feel like the upside here is maybe 30-40%, but the downside is just as great. So I'm not seeing a great trade. And typically what you'd want to be doing, if we look at some comparisons, right? We got Morgan Stanley, we got Goldman Sachs, and then here's Charles Schwab, and they all have similar market caps. And if you actually look at these tickers, so let's go to Morgan Stanley first, and let me open TOS again. So MS. You'll notice that, okay, this is a weekly chart as well. Right now we are a bit range bound, or in a way, a longer channel is forming here somewhere in this area. And maybe we're going to break out of here. But again, we're high on this overall range. And I just don't know how bullish I am regarding, let me just pull that up. So we're above the range on here, and we are in theory breaking out, right? So let me just put that there. So here's the big range. The top here, and this was a long time ago, 2007, and we're just back at those prices. Maybe we're going to be moving higher, but the downside is pretty significant if we go back lower in this range. So I'm not really sold on this sector as a whole, and the dividends aren't enough to really keep up with inflation either. Goldman Sachs, now this one's doing a little bit better, but it does feel like maybe it's again range bound in this area. So I just don't know if I can jump on this ticker with a lot of confidence, this whole entire sector. And it feels like, these are already some of the highest priced banks. So I think there might be more interesting options out there, maybe like SoFi, for example, that is trying to digitalize the whole entire process, or maybe some more online banks that remove a lot of the overhead. I think that could be maybe more interesting. Overall, it kind of feels like a weaker sector, or I don't even really want to say a weaker sector, but let's go back to MS, for example, which even as it was making new highs, it was having less volume, which is always a indicator of losing strength. And with Goldman Sachs, for example, similar situation. Price was going higher, volume was fading. So that is a example where there's divergence, right? Price is increasing, strength is fading, or the volume is fading. So that's always a bit of a red flag. And it just kind of feels like same situation. Price is increasing, volume is fading. And I just don't know if I really want to be buying this sector right now, which is predominantly, or in the short term, pretty high. And it's a sector that often gets stuck in a range bound. So I don't think you want to buy high in the range. Now, obviously, it could just keep going up and trending higher slowly, but it's just not the best risk reward trade in my opinion. So that's why I'm going to probably stay out of this one. But regarding using their platforms like ThinkorSwim, I'm pretty bullish about, and I really like the fact that settlement period is going down and net everything looks to be getting a little bit cheaper. So good news across the board. Thanks for tuning in, guys, and dropping that like. I'll see you next time.